Welcome, finance enthusiasts! Today we are embarking on an exclusive journey into the investment world of the legendary Warren Buffett. Known as the Oracle of Omaha, Buffett's portfolio is not just a collection of investments but a blueprint for success in the financial markets. Through meticulous selection and unwavering patience, Buffett has built a portfolio that's an envy of Wall Street. Join us as we unlock the secrets behind Warren Buffett's investment choices, revealing the strategies that have propelled him to the pinnacle of investment royalty. Get ready to take a peek inside the portfolio of one of the greatest investors of all time. The cornerstones of Buffett's portfolio. Warren Buffett's portfolio, a beacon of strategic brilliance in the investment world, is anchored by cornerstone investments that are much more than mere holdings. They are a reflection of his deep-seated investment philosophy, buying into companies with a warm moat, stellar management, and at a price that makes sense. Among these, Coca-Cola and Apple stand out, not just for the sheer market dominance, but for the insight they provide into Buffett's thinking and strategy. Coca-Cola, with its investments dating back to 1988, is perhaps quintessential Buffett investment. This wasn't just another stock purchase, it was a bet on a company whose products had universal appeal, a brand that was recognized and loved worldwide. Buffett saw Coca-Cola as a company that could generate cash reliably year after year, decade after decade. The beverage giant's ability to maintain a strong competitive advantage over time, or what Buffett refers to as a bold, made it an attractive investment. Coca-Cola's consistent dividend payments and its global brand strength underscored its role as a cornerstone in Buffett's portfolio, exemplifying his preference for companies with durable moats and consistent performance. The investment in Apple, initiated in 2016, marked a significant shift in Buffett's investment approach, showcasing his ability to adapt to the changing times. Historically cautious about technology stocks, Buffett's substantial stake in Apple signals his recognition of the tech giant not merely as a technology company but as a consumer brand with a wild moat. Apple's loyal customer base, ecosystem of products, and innovative edge presented a compelling case for Buffett, who saw value in the company's ability to generate massive cash flow and return value to shareholders. This move was a departure from Buffett's traditional investment criteria, reflecting his evolving strategy in response to the digital age's opportunities. These cornerstone investments in Coca-Cola and Apple reveal Buffett's knack for identifying companies that not just survive but thrive over time. They underscore his investment principles, patient understanding of a company's intrinsic value, and the focus on long-term growth over short-term fluctuations. Through these investments, Buffett demonstrates that the essence of successful investing lies in recognizing and seizing opportunities in companies capable of sustaining strong competitive advantages, regardless of the market's immediate trends or the economy's current state. If you're enjoying the video, hit the subscribe button and comment if you're unaware of these investments. If you want to explore money-making strategies, click the link in the description to start your financial journey. Diversification within focus. Warren Buffett, often lauded for his concentrated investment approach, harbors a nuanced strategy of diversification that belies the common perception of putting all eggs in one basket. This diversification within focus is not about scattering investments across the board, but strategically selecting sectors and companies where the intrinsic value and long-term growth are evident. Buffett's portfolio, particularly his investments in the financial sector, consumer goods, and more recently, technology, exemplifies this approach. The financial sector, for instance, has been a significant component of Buffett's investment strategy. His stakes in institutions like Wells Fargo and Bank of America were predicated on his belief in the fundamental role these entities play in the economy's fabric. Despite the sectors of cyclical nature and susceptibility to economic downturns, Buffett's investments reflect a deep understanding of these company's intrinsic value, bolstered by his assessment of their long-term potential to rebound and grow. This isn't just about banking on the financial sector, but recognizing the enduring nature of these institutions and their ability to generate value over time. In the realm of consumer goods, Buffett's investment in Kraft Heinz highlights his penchant for brands with a strong consumer base and the potential for sustained growth. Here, the focus isn't merely on the products, but on the brand move, its competitive advantage and market position. Kraft Heinz, with its portfolio of well-known brands, represented an opportunity to invest in a company with the kind of durable competitive advantage Buffett values. It's a testament to his strategy of investing in companies whose products and services stand the test of time, ensuring steady, reliable returns. Buffett's foray into technology, particularly his significant investment in Apple, marked a notable shift in his investment paradigm. Traditionally cautious about tech stocks due to their volatility and the rapid pace of innovation and competition, Buffett's stake in Apple was a departure driven by his recognition of the company as a consumer brand with a loyal customer base, rather than a traditional tech company. This move underscores Buffett's adaptability and his ability and diversify within his investment focus, aligned with companies that, regardless of sector, exhibit strong fundamentals, a solid competitive moat, and potential for long-term growth. Buffett's strategic diversification within focused sectors demonstrates his mastery of balancing concentration with diversification. By investing in fundamentally strong companies across different sectors, Buffett mitigates risk while positioning his portfolio for sustainable growth. It's a nuanced strategy that goes beyond the conventional wisdom of diversification, reflecting a deep understanding of market dynamics, company fundamentals, and the broader economic landscape. The evolution of Buffett's strategy. The evolution of Warren Buffett's investment strategy is a masterclass in adaptability and growth. From his early days of following Benjamin Graham's principles of value investing to embracing a broader approach that includes buying excellent companies at fair prices, Buffett's journey is a testament to the importance of evolving with the market. This evolution has been marked by a willingness to learn from experience and a keen eye for opportunities that fit within his principles, even as those principles themselves have adapted over time. A pivotal moment in this evolution was Buffett's shift towards investing in businesses with strong moats and predictable, durable competitive advantages. It was a departure from the strict Graham playbook, which often focused on undervalued stocks regardless of the business's long-term prospects. Buffett's acquisition of See's Candies in 1972 exemplifies this shift. He recognized that See's had a strong brand loyalty among consumers, which allowed it to raise prices without losing business. This investment underscores the value of brand strength and customer loyalty, elements that became central to Buffett's evolved investment criteria. Moreover, Buffett's foray into the technology sector, particularly his significant investment in Apple, marks a notable evolution in his strategy. Traditionally, Buffett steered clear of the tech sector, citing his lack of understanding as a barrier. However, his investment in Apple was grounded in seeing the company more as a consumer brand with a loyal customer base than a tech company per se. This decision reflects Buffett's acknowledgement of the changing landscape of value creation and his ability to see beyond the surface to the underlying fundamentals of a business. Another aspect of Buffett's evolving strategy is his approach to international investments. For much of his career, Buffett focused primarily on US companies. However, in recent years, Berkshire Hathaway has made significant investments in companies outside the US, such as the Chinese electric vehicle manufacturer BYD. This shift recognizes the global nature of business and the opportunities that lie beyond domestic markets. Buffett's investment journey illustrates that while the core principles of investing remain constant, the application of these principles must be dynamic. It's not about abandoning core beliefs, but about adapting them to a changing world. Buffett's ability to evolve, to incorporate new insights without losing sight of the fundamentals of value investing has been key to his enduring success. This evolution speaks to the importance of lifelong learning and adaptability, principles that are crucial for investors navigating the complexities of today's financial markets. And there you have it, a glimpse into the investment universe of Warren Buffett. From the cornerstones of his portfolio to his strategic diversification and the evolution of his investment philosophy, Buffett's approach to investing offers invaluable lessons on patience, value, and adaptability. As we close this chapter, remember the principles guiding Buffett's investments are not just for the elite, they can be applied by anyone looking to build a sound financial future. So, take these insights, apply them to your investment strategy, and perhaps you too can build a portfolio that stands the test of time. Thank you for joining us on this journey inside Warren Buffett's portfolio. Until next time, keep investing, keep learning, and keep growing. If you like this type of content, then press the like button and subscribe to our channel.